Hello everybody, back again with us, DNI. My name is Wahyu. I'm the founder of DNI and the host of this DNI podcast. And then with me
is Sim. I'm just a person. Nice to meet you guys. Glad to be here.
Sim is a very special guest at this episode because he knows a lot about cryptocurrency, and as you may know that a lot of people start talking about cryptocurrency, but sometimes they have no idea what it is all about. So, Sim, welcome to the show. Thank you, man, for coming here.
Thank you for having me. I really appreciate it.
I really appreciate your time too, man. So, tell us about you first, like as a person. Yeah.
Thank you. I'm a person. I'm also a human. I live on planet Earth. I like doing fun things, and once in a while, we'll get involved in this weird thing called crypto that everybody's kind of unsure about. But you know.
Yeah. How did you start?
So I'm an electronics engineer. I studied as an electronics engineer in communications and culture, and as soon as the first cycle happened back in 2012, I got wind of something called blockchain, that there was this new technology called blockchain coming out. I always get really interested in new technologies. So I started to look into what is the blockchain? What functionality does it have? What is so novel about it? And right away, it started to click into me that this is just the new way of doing the internet, and it just made so much sense. But at the same time, people were talking about it in the coin terms, and they're just buying coins and selling coins. So it was that part was a little confusing to me because I was not as familiar with the financial markets. And I saw this crazy bubble happen. You know, we all did, and then it exploded and burst with the Mt. Gox disaster, which was basically one of the exchanges getting hacked. And going through that whole experience, I thought it was done. It was dead. And then the next cycle, which was the 2017 cycle, I was enmeshed in it, and I saw that people had said that it was going to disappear, but clearly the technology has merit. And that cycle, things started to pump up again, and I actually put in a little bit of money into it. And by that time, I'd gotten really familiar with what blockchain is, what Bitcoin is, what Ethereum is, and I ended up making some money from it. Just took a few $100s and turned it into double. So which was huge at that time, and I turned that money into furniture.
Okay.
But I clearly pulled out way too quickly, and I realized that if I would have stayed in the market, that furniture would have turned into a car.
Wow.
And so then I realized that I need to get familiar with this and understand this. And same thing, the bubble pumped and the bubble popped, and people started calling it a scam, and there still wasn't guarantee that this is going to be adopted. And then I sold that furniture and I came to Bali.
Wow, what a nice story, man. So you double your initial investment, right?
Yeah.
So speaking about
pretty much by mistake. I didn't know anything about what I was doing. Yeah. I just got lucky at that point. Yeah.
Speaking about investment, so some people they invest in stock market, some people they invest in their own business.
Yep.
And why should you invest in crypto? And then can you also tell us more about the difference between blockchain and crypto for those who don't know or confused or even skeptical?
Absolutely. So first thing I'm going to say is this is not investment advice. This is not legal advice. You should never make a decision because you heard two people randomly talking about something, and you should never make decisions like that. You should do your own research. Please, a lot of people lose money in this sphere because they don't understand what they're investing in. So I'm not recommending you invest in anything. I would never do that. That's not
disclaimer.
Yeah, I'm literally not legally allowed to do that. So with that out of the way, blockchain is a technology, just like any other technology. When the internet came out, it was just a protocol. It was just a protocol to be able to connect computers together. And there was so much confusion about it, that what is this internet thing? Do we send email, I guess? Is that what the whole point of this is? Like, it just didn't make sense to people. But all it was a protocol for information to be exchanged. All blockchain is basically a ledger at its basics, blockchain is a ledger. A ledger is where you can keep track of transactions. What makes it a blockchain is that the ledger is broken up into blocks of a certain size. So it's basically data that's broken up into a certain size packets of data. What makes it a chain is that there's cryptographic technology used where, if I want to send you, let's say I have 1 Bitcoin and I want to send you 1 Bitcoin. When I send it, it's going to be recorded on that ledger. The ledger is going to say -1 for Sim, +1 for YU. But what if somebody could go in there and just change it and say 100 for YU, So what ends up happening is, number one, this ledger is stored on not just one computer, it's stored on all of the mining computers that Bitcoin runs on, or the blockchain runs on. But we're just going to talk in Bitcoin terms because it makes it simpler. But so all the computers that are mining Bitcoin, what they're doing is they're storing this ledger, and they're running a complex calculation to be able to produce Bitcoin. This ledger is secured through cryptographic technology that is called hashing, where when a block is produced, a very specific code is produced with that block, and then it's put into the next block. So the code that's produced in the next block is produced using the code from the previous block. So that's what makes it a chain. So you make a block, take a code, a hash code, you embed it into the next block, you encrypt it with its own hash code, and once this chain has been made, if you were to change even one of the blocks, so if somebody tried to go in and hack one of the blocks, let's say they hacked one of the computers and try to change that YU has 100 Bitcoin, that would change that code so that the entire chain of blocks would need to be changed. I know this is getting complicated, but that's what makes it a blockchain.
Yeah.
And what makes it amazing is that it's not on one computer, it's on millions of computers. So with that, it's unhackable. Well, there's certain ways to hack it, but it's technically unhackable unless you take over half of that network. So there's a million different computers running it, so you can never take it down. There's technology that is able to guarantee that it is right and nobody's messed with it, and that's what makes it so special.
So basically, if I can summarize it, blockchain is a system and crypto is run on the blockchain, and Bitcoin is a crypto, but crypto can be other than Bitcoin.
Yeah, so when you think about it, like, blockchain is the protocol. If you understand what a protocol is, it's just a technology that allows you to be able to run something according to certain parameters. Blockchain itself is just a protocol. Then you can build use cases onto it. Like the internet is a protocol, but you can build use cases like websites, right? So then you can build a website that has video on it, like YouTube. You can build a website that allows you to exchange money. You can build a website that allows you to sell products. So there's all these. So the protocol is blockchain. The use cases built on top are all these things that we look at as coins. And one of the biggest kind of misunderstandings that people have is they think everything is just a way of transacting money, because Bitcoin technically is a store of value. So it is the function that it has is to be able to store value and exchange value. That's the only function Bitcoin has. But when you're looking at Ethereum is actually a programming language. Effectively, it's a way for you to be able to run a programming language, run programs on the blockchain technology. So there's millions of computers across the world, and you can run programs on it. Okay, and then there's hundreds of other coins, which we call coins, but they're actually hundreds of other programs basically that have been built using the Ethereum programming language on the blockchain. So each one of them does different things. XRP or Ripple is a way for someone to be able to send value across the world to somebody else in a very quick fashion, and the settlement happens right away. Aave is a lending protocol where somebody can actually borrow and lend. Synthetics is a derivatives protocol. So effectively, these are all different things that you can do. Programs that do different things. They're built using the programming language called Ethereum, and they run on a system which is the blockchain-based protocol, basically.
It's very interesting. So there are many types of cryptocurrencies, and then what makes it interesting? People trust this. People trust this by putting their money in.
Yeah.
So if we look at the history, like 1970 or 1980, like when internet was not a thing, people start, using internet. But then they were still not really trusting internet back that time.
Yep.
And then now people say that blockchain is the thing. Blockchain is the future, right? So blockchain is like internet in the past.
Exactly.
So what do you think? What makes blockchain is the future? Number one. Number two. What makes people trust and put their money into crypto?
Great question. So, what was the internet? The internet was connecting a network of computers. So, when I need something done, I click from my house. The information flows down to a server that Google owns. Google server does all of the work. Maybe a search, maybe storing my docs, whatever. That server then sends that information back to me, and the work that I needed was done by that server. Google paid for the electricity, Google paid for the server, Google gets to keep the data, Google makes all the money. Blockchain is when I need work done, I click from my house. It doesn't go to a big server somewhere. It goes to a little server some guy is running at his house.
Randomly,
because there's millions of these running, right? All these miners, they're running computers at their houses. And instead of going to a big server that a central company owns, it randomly gets to a small computer that somebody's running. They do the work for me. That could be, changing Bitcoin, that could be running the program that is Ethereum, that could be markets, that could be millions of different use cases. But I need something done. I click, it goes to a little computer somebody owns. They pay for the electricity, they pay for the computer, they do the work, and then they send me back the information that I needed to do my work, and therefore they get paid. And what they get paid in is the coin that system is running. So that's why it's a new way of doing the internet. Instead of centralized giant servers owned by giant companies that steal your data, it's servers owned by us, run for us, by us, where we can't steal our own data because no central person owns it.
When you say us, it's the people.
It's the people. Like you could run a computer at your house. Many people are. That's why they're mining. That's one of the ways of doing it. Why do people trust it? Because people don't trust the institutions and money systems that we have right now. That's the biggest reason to trust it. Do you trust Google? Do you trust Facebook?
They sell our data.
Do you trust WhatsApp?
They all sell our data.
Yeah, they literally turned us into the products. We are the product that they sell to other advertisers. Okay, so do you trust governments? Do you trust banks? Do you trust hedge funds? How much trust have they stolen from us that we gave them control of all of our money, and what they did is they stole it. We gave the governments control of our lives, and what they did is they took advantage of the poor. We gave Facebook our data, and what they did is turned it against us and weaponized it in a way. Again, just my opinions, but I'm sure some of you can resonate with this. So the trust has been lost in the institutions that were supposed to hold trust for us. So now the new generations, they're looking for a new place to put their trust. And now, okay, we put our trust in money, and then they just go and print 40% of the money supply like last year? And just
without underlying
anything. We trust money, yet it's just paper. It's not even backed by gold anymore. 1971 it stopped being backed by gold.
Yeah.
So do I want to trust paper that some bureaucrat somewhere can just print unlimited amounts of and devalue my hard work? Like, we work hard for money. Everybody works hard for money. They have to put in the time and effort and blood, sweat, and tears to earn money. So that money is a representation of hard work. Some bureaucrat goes and decides to click one button on a computer and prints more money than all the hard work of everybody in the world combined, that's not okay. That's a complete dilution of the trust that we put into it. So now, let's say I have $1 in my pocket, or I have 100,000 rupiah in my pocket, and that guy goes and prints millions of rupiah. Now the rupiah in my pocket has gone down. That's why it takes 100,000 rupiah to buy things that like 10,000 rupiahs used to buy, and then 10 rupiah used to buy. It's because somebody somewhere is devaluing the currency. So then I can't trust them. I can't trust the government. I can't trust central banks. How do I guarantee trust? If I can't trust the main authorities, who can I trust? What you can trust is math and programming, because it's set up so that number one is decentralized. No central authority can just print a bunch of Bitcoin. No, it's mathematically set. So only 21 million will ever be produced, mathematically. Doesn't matter if more people want it. Doesn't matter if some bureaucrat wants it. There's no computer that he can click on. As a matter of fact, it's run on millions of computers, so no one person running the computer can even change it, you know? So okay, so then I trust math. Math has not failed us up until now. Secondly, gold even. We've trusted gold, but gold is produced at a 2% rate per year. The supply of gold increases at about 2%, and if the gold price goes up, the miners start mining more gold, and technically, we believe in supply and demand. That more demand creates more supply. Bitcoin is the first technology in history, first store of value in history, where less and less are produced every 4 years. There's something called a Bitcoin halving, where those miners are mining Bitcoin, a certain number are produced, and every 4 years, less and less are produced. Basically, half are produced every 4 years. So what that means is, even though the demand goes up, less are produced.
That's why the price goes up. Yeah.
It mathematically has to.
Yeah.
Because if more people want it and less is produced, then the price has to go up in order for that same supply to be able to serve the needs of the people who need it.
And speaking about Bitcoin, and let's talk about more different types of cryptocurrencies. Like Bitcoin, when people say, what is the value of Bitcoin? Why should we buy Bitcoin, and why should we trust? And with the Ethereum, I'm still new to this kind of field. So what I understand is that Ethereum is open source platform where you can use that technology to be able to create another coin, right? So technically and logically, why we buy Ethereum? Because we buy its functionality.
Exactly.
Right?
Yep.
But Bitcoin, you can tell me more, and then you can also basically give us more knowledge about the other types of crypto.
Okay, so if you think about it, to answer your first question, the reason why you should buy, again, not financial advice, don't do things because I tell you to, but the reason why I'm investing is because the biggest corporations in the world and the richest people and the billionaires are putting their money into it. I was wary about putting money into it the last cycle in 2017, where it was still unsure what it is it going to be adopted. I believed in it, but who knows, maybe they changed the regulations, we invented a new money. This time around, those trillions of dollars that were printed, that actually affected the richest the most, because they have the most amount of money. And when you dilute their purchasing power by making money out of thin air, they don't like that at all.
Or they are afraid of inflation.
Yeah, everybody is, right? And if you have $100 billion and somebody prints a quarter of the money supply, now you have $75 billion worth of purchasing power. You may have the numbers, but you can only buy $75 billion of stuff with it. So they are putting their money into it. They're doing it because when you look at the fundamentals of it, fundamentals of what Bitcoin is, what blockchain is, how secure it is, how it can't be messed with, how there's a diminishing supply, how it's cryptographically secured by mathematics, they see it as a great way of storing their value where nobody can decrease it. And if you're saying the price is going to go up, then that means their money is going to be worth more over time. So the reason why I think it's a good idea is because the smartest, richest people in the world think it's a good idea. And I know a thing or two about crypto and money. They play that game. They've made that whole game. And if they're leaving cash and they're leaving assets and they're leaving gold and they're leaving real estate to go to Bitcoin, I'll go there. Now, is it going to be a beautiful ride where everybody just gets rich? No. This is a very volatile market. It's going to go up like crazy. There's going to be euphoria. People are going to make millions, and then people are going to lose millions. That's how it's been, and that's how it's going to be for at least the next few cycles until the market can stabilize, until there's enough investment, there's enough trust, there's enough. Once the market matures, it'll get to a point where it'll stabilize. So, should you do it? Yes. Why should you do it? Because the smartest, richest people in the world are now doing it, and corporations are doing it. PayPal's doing it. PayPal's putting their money into it.
And why do you choose Ethereum over Bitcoin or Bitcoin over Synex?
Synthetics.
Yeah. Sorry. Excuse me.
By the way, I love synthetics. That's the derivatives market. Yeah. It's moving there.
So can you tell us more for those of you guys and including me, for those of us who...
Oh, me too.
For those of us who really new to this kind of stuff, can you tell us what we are buying here? Like, what is the underlying? Is there any crypto that has underlying, or it's just like based on mathematics?
Yes. So, great question. The underlying of Bitcoin is human trust. What you're buying is human trust. When we give you paper money, the reason why you value it is because of human trust. So the underlying of money today, all money today, is human trust. The only reason you want gold is because of human trust. Otherwise, a brick of gold, you can't eat. You can't feed your kids with it, but we all trust it, okay? So same thing is in Bitcoin. The trust. The fact that PayPal trusts it, the fact that people trust it, the fact that mathematics allow us to trust it, is the thing that's the underlying for Bitcoin. For Ethereum, the trust from Bitcoin bleeds over, but it's more that it's useful. It's useful. The reason why we value Airbnb, like Airbnb is nothing. Like, where is Airbnb? It literally doesn't exist, does it? Yeah. Uber doesn't exist. Yet,
but they say digital platform.
But it's a digital platform. It's a digital platform, but the use case of it, the utility it provides the world is so valuable. They're multi-billion-dollar companies.
Okay.
You know, so technically speaking, Ethereum is the use case of Ethereum is amazing. You give me an open source network that nobody can take down, that allows me to be able to create any kind of utility on it. Amazing. Okay, that's valuable, right? It actually does stuff. You know, Bitcoin literally just transfers value or trust. You just move trust here, move trust there. I own this much trust. I own this much trust effectively, generally speaking. Ethereum is a programming language. It allows me to program things. That's useful. The entire world needs programming. Then there are all of these coins and other use cases that are built on Ethereum. So like, you know, synthetics is a derivatives market. I'm not going to go into what derivatives is because it'll make you want to like gouge your eyes out. But it's the derivatives market, which is the biggest market in the world. The most amount of money exists in there. That is run on Ethereum. It's programmed on Ethereum. So now Ethereum is more valuable because you have the use case of being able to run the derivatives market on it.
So you're buying functionality. Yeah.
Functionality. So now when you buy synthetics and Ethereum, now you are effectively investing in a future where the derivatives market can be run on the Ethereum platform.
You are investing in future technology.
Exactly. But it's running today. It's running today. It's used today. It's running today. It's just not mass adopted yet. But by the end of 2020, again, just my opinion, by the end of 2021, there will be massive adoption. All this stuff with Wall Street bets and GameStop, all these things are showing us the hollow nature and the fraudulent nature of the financial markets today. The average person is not allowed to participate in them. Somebody in Burundi and somebody in, you know, middle of Jakarta who's sitting in his own village, he's not allowed to participate in the money markets, and that's what keeps the status quo the way it is. That's what keeps poverty the way it is. That's what keeps the money in the hands of the rich and keeps the rest of us struggling for it. This equalizes the playing field. If the derivatives market can be participated in without any central authority, without any middlemen messing with it, without anybody being able to block you because you made too many good bets on GameStop, and then keeping you from earning the money that you deserve to earn, then it allows the whole world to participate in things that right now are being kept away from them. Okay, and that's just one use case. Then there's 100 other use cases. You can track supply chains, and you can run YouTube on it, and you can, if it's programming, anything that runs on programming, you can run on it. So everything in the world runs on programming. So that logically means everything in the world could be run on Ethereum.
Yeah, and if we speak about money, for example, before 1971, where the American president, I forget his name, Nixon, decided to basically anti the relationship between dollar and gold, because if we look at the history of paper money is actually to replace, it works like a check to replace gold, right? So literally, let's say we have $100 as a paper money, we can replace that into gold,
exchange it into gold,
exchange it into gold. So it's like equivalent value. But then after 1971, when American President Nixon decided to just print dollar fiat money, and now we don't have underlying, and that makes subprime mortgage 2008, right? Because we print too much money.
Exactly.
And
that was the derivatives market that caused that collapse.
Okay. So
look into that.
Due to printing too much money, we have subprime mortgage 2008, and then now when we question about crypto, is there any type of crypto that has underlying? Other than mathematics, for example, crypto that has underlying like gold, or
there are cryptos that are being released which do have underlying. So there are ones that are backed by gold, backed by silver, and pretty soon there's going to be something called tokenization. It's already being done, but it needs to get a lot of regulatory oversight completed, basically. But the idea is we're going to tokenize real estate. So right now, if I want to buy this beautiful place, Tropical Nomad, it's worth $1 million. I have to spend $1 million to buy it. I can't buy it for $1 million. But if you then take this place and tokenize it and break it up into little tokens and make 1 million tokens from it, and you sell those tokens for $1, then I could buy like 1,000 tokens, and I could invest in Tropical Nomad, and then 1,000 of us investing together could own Tropical Nomad, and then the price of Tropical Nomad goes up to 2 million, and now our tokens are worth, instead of 1,000, are worth 2,000. So it'll be backed by real estate, and there's many of these. Like there's too many cryptos to keep up with, so I'm sure there's many I'm missing, but there are ones with underlying assets behind them. They're not as speculative as most of the ones that we're familiar with, because what makes the so-called ununderlying, the ones without underlying assets, so lucrative is that these markets are completely based on speculation. Like the reason why Bitcoin is worth 40,000 today is because people think that it's in short supply, and it is in short supply. Therefore, the speculation drives the price up. The demand goes up, the price goes up, the speculation goes up, things bubble to a point where it just gets parabolic and prices go to insane, ridiculous prices, and then it comes down. So yes, there are ones backed by real assets. No, they're not the ones that most people know about. And as far as investing, they're definitely a brilliant idea for anybody who wants to not have too much risk in their portfolio.
So for some people out there, they may be familiar with the stock market, right? So maybe I would like to connect this with a stock market analogy, because I'm myself personally investing in stock market. So if I'm investing in stock market, I wouldn't want to put my portfolio only into one industry.
Of course.
So for example, I will invest in a bank, right? And then I'll invest in agriculture industry, and then I will invest after COVID, I invest in medical supply, technology company.
Diversify your portfolio.
Just diversify portfolio, right? So if we basically use this analogy, basically cryptocurrency, when you say that there will be cryptocurrency that will be tokenized. So it works like a stock market, right? Well, correct me if I'm wrong. Because like in stock market, as soon as the company goes IPO, initial public offering, go public, and then people can buy per slot.
Yeah, sure. Like it's exactly digital shares of a company without using the stock exchange.
Yeah,
that's what tokenization is. Yeah,
that's number one. And secondly, can you tell us about the diversification of, let's say, if I decided to invest in crypto, how can I diversify my portfolio, and what decision that I should be based on before I decide, okay, I want to invest in Ethereum, or I want to invest more in synthetics, or I want to invest more in other type of crypto?
So the way to think about it is, when you invest in the stock market, you invest in companies that are really good and they do something really valuable. And then you think about how much value they're going to be able to create for the world. And if it's something that's really lucrative, then you invest in that company. And then you make sure you worry about the risk that you're taking, because you have to have companies that are stable and they have good use cases, and they have good treasuries, which means they have enough money to not go bankrupt. So when you're thinking about investing in crypto, you should think about how much risk you're willing to take. Because Bitcoin is the safest bet right now, because it has a narrative of being digital gold. It is being trusted by corporations and billionaires. So the safest, lowest risk bet is Bitcoin. Second safest bet, Ethereum. All the ones below that have increasing risk the lower you go, because one, they have smaller market caps, so they are not being invested by as many people. A lot of the cryptos are scams. So you have to do your own research, and you have to understand the use for it, the use case for it. You have to understand if that has value. You have to then understand how much value that's going to create. And then you have to take a bet, effectively saying, I bet the value of this is going to go up, and that's why I'm willing to invest in it. So to answer your question in a short way, if you want to be safe, invest mostly in Bitcoin. Even if you double or triple your money, that's more than enough compared to a normal market. Again, I'm not saying it will. I'm not telling you to do anything. As a matter of fact, you should never do anything when I say it, ever. Do the opposite of everything I say. I don't know. I'm just kidding. But so to be the safest, invest in Bitcoin.
Okay.
If you don't know what you're talking about, don't invest until you know what it is. And if you don't know what it is, never invest in anything you don't know. And then, so going mostly into Bitcoin and a little tiny bit into Ethereum is the safest thing you can do. Any of the other ones, you really have to understand what you're talking about and what it is and what the use case is. Otherwise, you're taking a chance like anything else. But XRP is working with banks and has the potential to. It allows money to be transacted across the world, and central bank digital currencies in the future potentially could be run on XRP. I think that's a very, very lucrative market. So I would love to have that.
Very futuristic technology. Yeah. So I would like to share a little bit of my experience. Before I decided to start investing in stock market, I have joined like a couple of investment short course, right? So there's like fundamental analysis, there's technical analysis. Even after I finished all these courses, I was still not really making my move, because I was kind of like scared, and will I lose my money, and so much doubt in me. And but yeah, after a couple of times, I attended some short courses and meeting some expert, having some mentors. Finally, I decided to jump in. And I think all the investment is driven by the emotion, right?
Of course.
When everything goes up, we want to buy, and then when everything goes down, we want to sell. Of course, you lose money when things go down and you start selling. Of course, you lose money, right? But then next couple of months, things go up again. So imagine if you didn't, if you're not freaking out, if you're not panic, you didn't sell your share before, then actually you're just fine, because things are ups and downs, right? And coming back to the fundamental analysis, so my mentor told me that let's say if you invest in stock market, let's say for example Unilever, if you see all the products are still being displayed at Indomart, Alfamart, or any supermarket, and people keep buying the products, right? And the products are needed for our day-to-day life.
Yeah, they create value in people's lives.
Exactly. Yeah. If one day the shares goes down at some point, you shouldn't be panic, because at some point again it will go up.
It will go up. Yeah.
Because the fundamental of the company is good. If the product is needed, if the financial report is good, and then who are the people behind the company. So those are the fundamental analysis, right? But the technical analysis usually is used for short-term investment, or AKA trading.
Trading, exactly.
Yeah, trading. Yeah. For long-term investment, we invest, we sleep, we forget about it, and then the next 2 years, maybe we sell.
Exactly.
Right? But for the short-term investment, we invest today, for example, one lot costs 500K, and then tomorrow, suddenly goes up to be 1 million, and then we sell it, so we get the margin 500.
Yep.
So connecting that to the crypto, when people want to invest, what do you advise on people? What sort of like analysis they should use? For example, in stock market, there is fundamental analysis and there is technical analysis. For fundamental analysis, usually for long-term investors or long-term investment. For technical analysis, usually for traders. But in crypto,
it's very similar, that you should always do your fundamental analysis no matter what. You should understand what it is. You should understand what it does, what the value is that it creates in people's lives, what the likelihood of it is that that value will actually generate money for the network itself. Technical analysis is a really good idea because you can understand which way the market's moving, especially because this market has, in the previous all of 12 years that we have of history, has moved in very predictable cycles. Pattern analysis is a great way of actually seeing the patterns that have come out of the previous cycles, and they're tying to something called a Bitcoin halvening that we talked about, where half the Bitcoin gets produced. So it actually gives you these milestones to be able to gauge where the market's going to move. As far as like investing in crypto, the way to think about it is investing is a game of psychology. It's all about psychology. What people don't understand is, what often we don't understand is, it's a psychological game that the person who makes the money wins. They know when you're gonna see something going up in price and think that you're gonna get FOMO, fear of missing out, and then you're gonna buy it. And then they know you don't have the wherewithal and the guts and the knowledge, because you didn't do the research, to know that even when it goes down, it's gonna come back up. So as soon as it goes down, your emotion, you freak out and you think you're losing money, so you sell it. Now, when the price of milk goes down, do you want to buy milk? Yeah, because you're like, it's cheaper. I think I'll buy bananas now because they're cheaper. I'll buy a house because the price went down. How come when something in the stock market or in this market, the price goes up, that's what makes you want to buy it? That's, again, a psychological trick. What you should be doing is when it goes down, you buy it, right? Because when it collapses, when this whole collapse happens, which is this next one's going to happen, inevitably, this whole market's going to get pumped. Everybody's, euphoric, thinking about how they're millionaires, and then when it drops, everybody's going to lose a bunch of money. But once that happens, that's when you should buy it, logically speaking. But what ends up happening is you haven't done your research, you don't understand the fundamentals, you don't know what you're buying. So first you're scared of it because you don't even know what it is. So why would you invest in it? That's smart. But as soon as you see everybody else putting their money in and people start talking about making money and it's going up, up, and up, then you start to think like, I don't want to miss out. I'll put money in there. Again, you don't know what it is. You put your money in it. Second mistake. Then you don't pull out your money when it actually does go up to the top because you have greed in your eyes and you think, I just double my money, triple my money. I want 5, I want 10, I want millions, I want yachts and
being
boats.
Greedy.
I want airplanes, and then that greed is another psychological trick, which then makes it so that you actually don't pull that money at the top. Then when it's coming down, you still have the greed in your eyes, so you want it to go back up. Please go back up. I want the million that I had. I want the millions, and you still don't pull out your money. Then when it goes down and crashes, and as it's going down, then you freak out and sell because you're like, I just don't want to lose all the money that I invested at the beginning. Again, an emotion. So here's some rules. Rule number 1 of investing in crypto. Do your research. Don't invest in things you don't know. That's just a fundamental fact of investing in anything.
Make a note.
Write these down. Rule number 1, don't invest in things you don't know, ever, in any market, ever. Not just because 2 dudes told you to do it, ever. Rule number 2, do not have emotions in investing. No emotions. Happiness when it goes up, no, bad. Sadness when it goes down, bad. Greed, very bad. And that's rule number 3. Don't be greedy. Rule number 4, take profits. When you're in profit, take your profits. Be happy with what you got. Don't just wait for it to pump and go crazy and all that stuff. And rule number 5, don't do things other people are doing. I mean, that one is a little bit, you could argue with me on that one. Like, yes, there are some times when, it's going up and you see people doing it, and sure, whatever, you can make some money, but the way money works in the investment markets is everybody can't make money. That's just not how it works. If everybody was making money, where's that money coming from, right?
Yeah.
So some people make money. A lot of people have to lose money for those some people to make a lot of that money. So if you're going out and doing what everybody else is doing, you're buying GameStop because you heard about it and some news, and you see everybody buying GameStop, and you go buy GameStop, then obviously you can't, logically speaking, that must be the decision that will make it so that you're much less likely to make money because you're making the choices when everybody else is doing it. So I think it's Warren Buffett that has this quote. I don't even know if this is exactly a quote, but it's that when other people hate it, you buy it. When other people love it, you sell it. Okay, right now, very few people are talking about crypto. Only the nerds like me are like, crypto. But so that's when you buy the crypto, because you're like, okay, nobody's talking about it. I'm making decisions other people are not making. Is it risky? Yeah, you're taking risks other people aren't willing to take. That's why you get paid the money that you do. In a few months, everybody will talk about it. Remember in 2017, our parents, grandparents, people who never touched the computer before, they were like, crypto, I heard about it from NBC, and they told me I should buy crypto. I saw it on the news. And then they put their life savings into it. And what happened? They lost all of it. Because everybody heard about it. Everybody put their money into it. The smart money put money at the beginning when nobody was talking about it. And then that smart money goes and publishes the news on all these places, pumps out the news that this is the way to get rich, and and people who don't know what they're talking about get this news. The whole world puts their money in, and guess what? Those smart money guys take their money and they run. This is just how the world works.
Yeah, so sometimes the world is cruel, huh?
The world is not fair. Life is not fair, but on some positive news, this is the first time in history that the treasuries of mega corporations like PayPal and Grayscale and thousands of companies that haven't even done it yet that are going to be flooding in to join this revolution, their treasuries and the billionaires' pockets are going to be exposed to the average person to be able to take a little piece. And now, I'm not against, there's nothing, profit is good. Okay, money is not the root of all evil. The love of money is the root of all evil. Yeah. But money in and of itself is just a tool. So if you play this game right, this is going to be the biggest wealth transfer in history, and you can legally and correctly get a little piece of these massive treasuries and billions and trillions that have been kept away from you. They'll become available to you. And you'll learn how to play a game, which they've been playing for a long time, fairly, to be able to make those billions and trillions.
Yeah, I love this quote. I don't know if you have ever heard this one. So always put the money on your hand, or keep the money on your hand, but never put your money in your heart.
Yeah.
So which means
that's a good one. That's a good one. Yeah.
You don't act emotionally, right? So if you lose money, don't be too emotional to it. Yeah. If you earn too much money, don't put it into your heart, because you will be greedy and you will be you that's where the root of evil starts.
Exactly.
When you start putting money in your heart.
Money should not be the point of what you do.
Yeah.
Money is not the point.
Money is the tool.
here, you guys all want to get rich. Here's the easiest way to get rich, and the real way to get rich. Like, I've met a lot of millionaires and billionaires, and they were. I see a lot of Balinese people that are more rich than them. And here's what makes you truly rich: 3 things: passion, purpose, and love.
Agree.
Okay, this isn't my idea. I learned it.
Yeah.
But goddamn, I live by this idea.
Yeah.
If you wake up and you have passion in your life for whatever you do, for the people you love, you have purpose.
Yeah.
You wake up with a purpose and you live your whole day to this purpose. And you have love for yourself, love for your loved ones, love for life. You're richer than anybody out there. The numbers in some bank account do not define. Ask the most rich and famous people if getting all the money and fame, what it did for them. And most of them will tell you it took their passion, took their purpose, and took their love.
I completely agree with you, my friend, because I'm actually writing a book called Love, Knowledge, and Purpose.
Yes.
So knowledge can be translated as passion.
Love it.
So yeah, we are on the same page on this.
I love it. I love the frequency, guys. We're tuned in. This is the Bali thing we do. Yeah, 100%.
And coming back to business a little bit.
Yeah.
So if we take a look at stock market,
Yeah.
right? There are so many factors that are actually very influential directly or indirectly to the stock market.
Yep.
For example, if we have the fundamental analysis that we have to know the financial report of the company and if the product is needed by the market and
Yep.
who are board of the directors, board of commissioners, basically men
Yeah.
behind the gun,
Exactly.
the guys behind the company.
Yep.
And also there's external factor. For example, election, right? For example, news, world news. Give you example. Tesla is looking at building factory in Indonesia, in Sulawesi, North Sulawesi, because that's where the biggest nickel reserve located in
Nice.
Indonesia.
Yeah.
And then with that news alone, all the automotive companies in Indonesian stock market start going up.
Yeah.
You know, because they may think, oh, Tesla, as soon as they get into Indonesian market, like start building factory,
Yep.
they may have to build some partnership with local automotive company.
That makes
So
sense.
like all local automotive company
Went up just on the news.
Yes.
Yeah.
So like, is there any this kind of external factor that will influence crypto market?
Oh, right now the whole crypto market is influenced by just that, because these technologies and use cases, they're not mass adopted. Many of them haven't been fully fledged out. They haven't been fully developed. So that concept is known as FUD in crypto land. It's fear, uncertainty, and doubt.
Oh,
that people will literally release news with fear, uncertainty, and doubt, and then release rumors and hype news to try to pump things up. So it's mostly just running on rumors and news. That's why you have to do the fundamental analysis of who the team is. You know, who are the people behind the scenes? What are the use cases? What have they built? What partnerships have they got? What future potential does it have?
With partnership they got, like crypto.
Yeah, so there's
Some coins can do partnership.
Oh, there's many of them. There's ones that are partnering with Google, partnering with Microsoft, partnering with Oracle. Zero Change is partnered with Oracle. So there's a lot, and then there's partnerships between cryptos as well, because they're technologies and companies and they have use cases and they need to work together to be able to perform certain functions. Like you need to work with Ethereum if you want to build something on Ethereum, right? So there's a lot of partnerships and things going on, but you have to weave through all of the negative news and all of the market manipulation, because this is not a regulated market. So it's constant manipulation. It goes up on news, it goes down on news regularly.
So basically you have to be aware of the news regarding this topic. Yeah.
Fake news, real news, news. Who knows what news is these days? This is you're taking the risk. You have to know. That's why you have to really deeply know and believe in and understand what it is, so that you can stay stable through all of that positive and negative news.
And speaking about partnership, this is very interesting. Let's say if partnership happening between company to company, we know who is the owner of the company. We know who is the board of director. We know who is the shareholder. We know if this company is is
Everything.
public listed,
Yep.
listed publicly or not, right?
Yep.
How do we know, for example, is Ethereum owned by someone? And then if some companies like Google want to partner with Ethereum, who do they contact to?
So that's a really good question. Basically, there's teams of developers. There are foundations that run most of the cryptocurrencies.
Wait, foundation as legal entity?
Yes, yeah. So there are legal entities which are managing the coordination of the developers that work on most of them. Bitcoin does not have it. Bitcoin is invented by we don't know who. It's not managed by anybody. It's completely decentralized effectively. There are developers working on it and they are coordinated. But like for example, Ethereum was invented by Vitalik Buterin. He's still the figurative head of Ethereum.
Or there's somebody who invented.
Yeah, he basically came up with the idea and brought it to fruition. There's thousands of developers that are working on it. When you need to work on it, you work with the developers who are already working on it, or be able to use the open source protocol and just build on it yourself. So there's many different ways of doing it. There's many cryptos that actually have central companies. Like XRP actually has a company called Ripple Labs, and they own the technology of XRP, and they're the ones who work with industry to be able to do stuff. So there's many different ways.
Okay.
Oh, I'm seeing a blinking battery up there. Is the battery dying?
Okay, so we move to second camera. This is very interesting.
The camera's dying like all of us. It's dying slowly.
This is very interesting topic. So even the camera battery cannot stand.
We're not leaving. We're
not leaving yet.
Yeah.
Yet. Okay, so that's very, very, very good answer. And so basically, Bitcoin is the most decentralized crypto that you have ever had.
Yes.
Right? And then the other than Bitcoin, for example, Ethereum, is funded by someone and then developed and managed by a legal foundation.
Okay, so that's generalizing.
Yeah.
There's over 3,000 of them, so all of them are different in their own way. But generally speaking, you could look at it as that. But again, you got to do your research. You got to learn about each one, and then each one will be set up in a very specific way. Yeah.
So basically, if let's say I have a company and my company want to do partnership with Ethereum, so I just need to contact who is the legal foundation or legal entity that is building Ethereum or working on Ethereum.
Well, so it's just open source code.
Okay.
You can just get the code and get your developers to work on it. Ideally, you would want developers who are working on Ethereum already or working with Ethereum already, but it's just open source code. And so you just get the code, and in order for you to be able to operate on it, you could set up nodes of Ethereum, which is server setup, computer setup, or you just buy the Ethereum coin, and then that Ethereum coin allows you to be able to function on the Ethereum network. So you just need to take it's like programming. You can take the programming and build your own program with it.
So for example, if I would like to make Wahyu coin, for example, just
let's
random
make it.
name.
We're making Wahyu coin, guys.
In the future.
Wahyu coin coming to you soon.
Wahyu coin,
soon.
right?
Yeah.
And I will use Ethereum as my foundational technology.
Yep.
So if I'm looking for Ethereum developers, I'm just trying to find which foundation that has developers of Ethereum, and then secondly, can I also own the IP or whatever you call it?
Yeah. Of Wahyu coin,
yeah. So can I own the IP, and then the functionality of my coin, I'll just like put it on the market.
Yeah. So if Ethereum is programming, then let's say, it's like any other programming language where you can use the language and the programming protocols. Like for example, on the internet, you could build a website that you own, but it runs on the internet.
Okay.
You could
so
build
that's the analogy.
You build Wahyu coin, but it runs on Ethereum.
Okay.
Yeah.
Okay, very interesting.
Yeah.
And
you effectively pay for the hosting with Ethereum the same way you would pay for hosting on the internet with money.
And you mentioned that there are some types of crypto that will soon replace YouTube, for example, or some.
Who knows? I don't know anything. All I know is I know nothing. But yes, there are technologies. There's one called Theta. Theta is a crypto that allows you to be able to run YouTube off of these decentralized servers. Yeah.
Well,
okay, this is just my opinion, but crypto is going to replace everything. The entire world is going to be run on it. Okay, let's just be honest. Like same way the internet, everything is run on the internet. And in 1999, people thought it was just an @ that you used to be able to send emails. And today, there's not a single thing that isn't using the internet. It revolutionized everything. This is the next revolution. This is a new internet and new technologies that have real use cases the same way the internet did, and they're going to revolutionize everything. And by 2030, you will watch this podcast again on the internet of crypto.
So don't forget to save this podcast, download it and save it, and subscribe to our channel.
10 years.
In 10 years, you come back to our channel, and you should thank him because, he's now trying to teach you and trying to make you understand how important it is to understand about blockchain, crypto, and start doing something about it.
Yeah, invest today, leave it for 10 years, buy a yacht, and then invite me onto that yacht for a party. Let's do that.
Okay, that's nice opening. That's nice closing. It's very, very interesting topic and a lot to digest. And I personally am learning this now, and I'm very passionate about this. And thanks to Sim, he's been teaching me a lot. So for those of you guys who wanna meet more interesting people like Sim, don't forget to subscribe our channel. Yeah. Two of us. Don't forget to subscribe our channel and then share our video, and hopefully this is gonna be your very first day to start thinking about doing something about crypto. Start investing, start doing research, start learning from people. If you wanna meet meet Sim, feel free to come to Tropical Nomad. You guys are welcome here, and you can learn something from us, one or two, and
we'll learn something from you.
Yeah, we'll learn something from you too.
We love interesting
people. We learn each other basically, and stay tuned for our channel, and then hopefully see you soon in the next episode. Bye bye.